Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly, we're going to start with the most important in the Asian sector. Most Asian markets, however, we saw them losing ground on the final trading day of the week, following of course losses in the United States, their stocks also overnight on the concerns over global earnings. Now, also tracking the Asian Pacific, the Australian S&P 200 index was down about 0.5%, led by declines in the energy and materials, and of course the financial sector. Nikkei 225 index advanced about 0.5%, of course on a relatively weaker yen. The Japanese yen remained fairly steady, with the pair trading around 109.43. Chinese mainland markets were of course mixed, with the Shanghai composite down about 0.5% and the Shenzhen composite falling about 0.17%. Also tracking the European stocks that posted losses on Friday's opening following week US and Asian markets over the night. The Pan-Stock 600 index opened 0.3% lower, with the most sectors in the red. London's FTSE 100 slipped 0.5% at the opening, as of course miners fell as well, while the DAX fell about 0.5% as well. The European stocks markets look set to reflect the negative sentiment seen in the other regions, as Asian markets lost ground on the final trading day of the week, following losses in US. The euro, however, has been tracked. It's steady on Friday after volatile overnight session following the European Central Bank's meeting, as of course markets were caught between the ECB's steady stance for now and expectations for further stimulus down the road. The European currency was on track for a slight weekly gain against its US counterpart. However, it was on track against a basket of major currencies and poised for modest losses. The euro edged down about 0.1% to 1.1301. On Thursday, it had dropped to as low as 1.1270 from a more than a week peak of 1.1399 as well. As takeaway from the meeting in the ECB statement yesterday, immediate plans to add stimulus are not going to be made so far. So the impact on the economy looks steady. Gold in the commodity sector is modestly down, as the optimism over China from recent data was shown that new debt fueling a recovery in the factory activity, investment and household spending is bolstering slightly the yellow metal, but of course 5-week high of $12.70 an ounce. And of course it's down to $12.49 tracked on Friday morning, modestly in the range of its previous settlement. Tracking the US West Texas Intermediate crude, it was up about 52 cents at 43.70 a barrel, modestly lower however from its peak of 44.30 posted in yesterday's session. That's all from the important news from today. I'll see you next week. Thank you for watching. Bye bye.